Welcome to the Ranchonomics podcast, where we empower you to build a better ranch and transform your operations into a thriving business. I'm your host, John Haskell. Let's get started. Welcome to the Ranchonomics podcast. Logan Pribbeno, I'm excited to have you back again. Wally Olson was supposed to be joining us today, but he is enduring a power outage. Logan, we spent last time talking about kind of outlining your, what I think of as kind of a macro market timing strategy for owning cows and deciding when to own cows and when to get out of them. I would refer people back to that episode. If you haven't listened to it already, it would be good to. I'd like to talk a little about the pitfalls of this type of system. When we're making 10-year type decisions in our cow herd, what are some of the risks that we face? So do you want to go into that just a little bit?
Sure. And I could talk a little bit about the time we got it wrong, which would have been 2006. Of course, I was in California working in Silicon Valley at the time, but I always knew I was going to come back. So I always checked in with my father, but they tried to time the market in 2006. And, we all know that the drought of 2012 really reset the cattle cycle. And 2006 was theoretically going to be the high, but the droughts affect the cattle cycle more than anything else. And it shifted a period of 30, 40 years where the 10 or 11 year highs occurred at 5s or 6s to a different window. We sold cows in 2006, a good chunk of them. And so I moved back in 2012. We experienced a drought, and the run up in 2014, we did not have a pile of cows like we do right now. And so we missed the timing on that cycle. And I will tell you that it was painful for me. So I just came back, my wife and I, from California. We had bought into the operation company, and we didn't have a lot of cows at that time. And my friends who did have a lot of cows at the time were minting money. I know of several ranches that made all-time high profit targets, and Wineglass Ranch was not among them. And I sat down with my dad in 2016, and I said, we really did not get that right. What can we do to make sure that the next time this happens, we're in an optimum position? And because of that pain, it was very painful, John.
Oh, yeah.
And I mean, we were not losing money, but it was like it seemed like what could have been a once in a lifetime opportunity to actually make good money, put it in the bank so you have a war chest, and we missed out on it. And because of that pain, I'm sitting here today having sold a bunch of cows and still having a bunch of cows. So that pain created this opportunity.
Right. So, and I do want to emphasize that because that's something you guys are wonderful about, being willing to speak about that as a time when it did not go well. And I know that internally you have really analyzed that multiple times over and made sure that is something that doesn't happen again, or, at least increase the probability as much as possible that does not happen again. That's something I have a lot of respect for you and your dad about. Most of us kind of want to shove our mistakes under the rug and just move on. And that is not often what best serves our business, right?
Yeah. And I'll also tell you that the sale in 2006 didn't even go well. My dad was May calving, and in 2006, May calving was unheard of. And we have been bumping it up, so we're April calvers now. We really like calving May 1, but he didn't do it at the time. And even the sale, it was a true age dispersion sale, but even the sale was well under average. So, I mean, not only was the timing poor, is even the marketing and the sale of those cows really did not go particularly well. So it was a double flop.
And that just emphasizes it used to be such a good deal to go to places like Torrington and Ogallala and buy May calvers. And you could buy them in April and they were cheap. And you could buy them in March and they were cheap, and it was spectacular. And then I remember being in Torrington one day and there were like 4 other guys bidding on May calvers. And it's like, and most of them I knew. And it was like, what are you doing? Like, you're ruining this. This is terrible. I don't like that, to bid against other people on these deals. Like, oh, the only guy that'll take the May calver. Like, okay.
Yeah, it's changed. It has changed quite a bit.
Yeah. And, that is for the better, as all things. I hear people all the time say, well, what happens if a bunch of people adopt this strategy? And it's like, it probably won't matter very much. That's one where it actually, in local sale barns, it did matter. There are other sale barns where May calvers are still, spoken of as though they're illegitimate children kind of thing, but not in those locations. So, okay. So then let's talk about the impact of drought, because to me, that is something. 2012 was a big deal. Funny you talk about 2006. Where I was in 2002 was a terrible drought in Utah.
Same.
I think you guys were in that same pattern. Yeah. So how does that affect your ability to stock up? Because that is one thing, I don't think you guys were in terrible drought within the last 5 years, let's say, but I think you have gone through, you had at least one or two pretty bad years in that period. Is that correct?
Yeah. And let me also clarify, we're an all dryland operation. So we have a dryland farm as well. So, it affects us very deeply. And 22 was very bad for us. At one point, we had 9 inches on a rolling 12-month average, and our average is 20. And at 9 inches, I learned that you can't do anything right. There's no right thing to do. When you're less than half, it really deteriorates. And I'm really glad you're bringing it up because you have to hold the cow herd together through this drought, right? So we grew in 2020, and if we sold in 2022, it would not have been as good by far. So I'll tell you this, John, and I told Wally this before, but the one thing that really made this work is my dad convinced me that this cow sale was my idea. In retrospect, talk about how it's 30 years, but when I came back, he kind of hinted at me and he talked about how John Maddox does this. He gave me the book. He also gave me that editorial from the year 2000 and said, hey, here's a strategy. What do you think of that? And we just missed that 2014 run up. And, my dad's like, yeah, what do you think about that? And I said, we should grow the cow herd and sell it. And so the number one thing that my dad did was he convinced me that it was my idea. And because it was my idea, I was going to personally oversee that it was success. If it was my dad's idea and the drought had come, I would have went to my parents and said, our hands are forced in the matter. There's nothing that we can do. I'm sorry, the strategy isn't going to work, but I couldn't let my ego take it. So what we did is we grew and we leased different places to keep the cow herd together.
Good. And we mentioned last time that your cost run up there of about $300 a year from 650 to 1,000-ish a year. That's primarily what drove that, was making sure you guys could get through that drought.
That is correct. And so that's one thing we did. The other thing that's nice about Southwest Nebraska is we have corn stalks, and corn stalks are a huge part of our program, as it is for everyone in Southwest Nebraska. So our cow herd spends more time on farm ground than it does our ranch. And that is true of many ranches in Southwest Nebraska. And those corn stalks, 90% of the time, are irrigated. So when we are in a drought, we tend to still have our winter feed. And so we can hold the cow herd together a lot better versus those operations west of us that, rely on hay or winter grazing. So at least our winter feed is drought resistant. And that is really, really, really helps us through a drought. Is you just got to survive the summer because a fixed feed resource is coming your way. And that is one of the stark benefits of running a cow herd in Southwest Nebraska, is the drought resiliency of irrigated corn stalk grazing.
Okay, good. And then I'm curious, what if, so Montana, Wyoming, a few other places, your drought was 22. Those states really endured a 3-year drought. And I think you had other years in that stretch that weren't that great, but they weren't 2022. So what happens if this becomes a multi-year drought?
That's a really good question. And we are looking at reduced stocking rate this year because of our moisture conditions. So our rolling 12-month average rainfall is 15 currently, which 17 and above would be like 80%. And that's your golden zone. And we are not in that. So we are reducing our stocking rate by about 20, 30% this year, right off, just because of that. We did have a wet fall in Southwest Nebraska, Northeast Colorado. So our cool season grasses, which are not a huge part of our production, but they are doing very well. But yeah, this being a multi-year drought is a serious risk for us in the fact that it could prolong the cycle for a year or two more. And, we plan to sell the second half of our cows here in March of 2026. And if there is a nationwide drought that continues, the cycle highs may be pushed to 2027, in which case we would have played our hands too quick. And my neighbor, John Maddox, as of right now, they plan to sell in that 26 and 27. So it'd be very interesting to see what that 27 looks like. And there are drought factors and several other factors that risk us doing not the optimal thing.
And it's fascinating to me because there are multiple large scale trends, right, that play together to drive the cow cycle, right? Some of them are internal just to cows and reproduction and the, biological speed. And some of them are related to drought. And it's fascinating to me when we saw 14 on the heels of 12 and this run up that we've seen, which really came on the heels of a 3-year drought over big parts of the country, but not the same way in 12 where we saw the places where huge amounts of cattle live really heavily affected. So it's interesting how this plays together. And I don't know how often we plan on a big drought in the South Plains, but I mean, that deal in 2011, 2012 was brutal. And I think it started in maybe even 2010, but 2011 was terrible in the South Plains. And then 2012 was terrible throughout the West. In Nevada, we had a situation in 2012 where if it wasn't irrigated, it didn't grow. And we were on, a tiny fraction of our normal irrigation water. So literally a whole bunch of range just didn't even green up that year.
Yeah, drought is the defining thing in our industry, that some people would say that drought affects what people stock and how people stock more than prices. I've seen that repeated many times. Drought really drives our industry as ranchers.
Yeah. Do you know somebody that's wrestling with serious medical issues and all the expenses that go with it? If so, go to hiscavvyfoundation.com, Cavvy spelled CAVVY, apply or nominate them for assistance from the foundation, where we help people in the ranching business get through those things together. So through the period of running, so from the initial point of the run up in numbers until you started actually, selling down your cow herd, what are your primary products that you're selling there? What are you using to generate cash flow?
Sure. So the last time we did that, we were buying and selling gap steers. So we were buying ballers that were gap, natural NHTC. At the time, it was about $250 a head premium. We did that for 3 or 4 years and it worked really well. So before we ran it up, we were primarily a stocker operator and also working with some ranches in Wyoming to send them to as well. And we have since not done the gap program. The premiums have not been the same, especially when you look at it as a percentage basis. $250 a head premium was certainly something that was attractive when
you're buying a $700, $800 steer, when you're buying a $2,000 steer, a little different, right?
Yeah, it has gone away. I do think we're going to do it a little bit different this next time. I think we're going to be more into heifers, not the premium side of the stalker deal. Be a little bit more opportune about what we buy, not locked into that gap program. We were buying pretty high quality whole ranch sets when you were after that gap premium. And I think when we do sell down the cow herd, we'll still have, 1,000 cows when this thing is all said and done. So we're not completely exiting the cows, but I do anticipate going back into stockers, not doing the gap deal in the steers, and just being a little bit more opportune in the buy and the sell.
Yeah. And then tell us a little about your heifer program, because this is another important piece of this whole thing. Are you retaining all of your heifers while you are growing your cow herd?
Yeah. So we will retain all of our heifers while we're growing our cow herd. And that's what we're going to really build from when we sell down again next year is the heifers. And we have a great heifer program that Burke really helped us dial in that we run them very cheaply. We run the heifer calves on corn stalks, cake them a little bit, put them on a little dryland wheat pasture, take them to the range, expose a high number of them for a short period of time. And, we've had a 60% breed up on our replacement heifers. We've had a 50% breed up on our replacement heifers, and that's completely acceptable. We'll sell those opens at a handy profit there in the fall and just keep the best ones bred to enter our cow herd. And that heifer development program that Burke helped us with has been top notch. It's year in, year out. It is our highest gross margin enterprise.
Yeah, I think that's been one of Burke's greatest innovations in the cattle business. We use that over and over and over again.
Yeah, and let me tell you, I came back and Burke came in 2016, I believe it was. He was here for 2 days on wine glass. And prior to that, I told Burke, I said, I've got a problem. I'm only getting 85% of my heifers bred. And Burke said, yeah, you've got a problem. That's too many.
That's not the answer you expected.
Yeah, I was like, well, wait a second here. What?
Oh, one of the great reasons why it's good to have somebody else come and look at your place, right?
Exactly.
What?
And he really did help us dial that in and manage the expectations. And it's been a great enterprise since he helped us.
So I want to talk just a little more about that because this is a place where there are a few misconceptions. I want to make sure we define some words. When you say short breeding season, tell me what you mean.
Sure. So for our heifers, depending on our growth mode, we have put in the bulls for as little as 21 days. When we are growing, we will expose them for a little bit longer. We're currently exposing them for 45 days because we just want more to enter the cow herd. But we will put the bulls in for as little as 21 days. Occasionally, if the price is going to be good for the breds, we can leave them in and then we'll clip the late ones and sell those. But you have to look at the relationship between a late bred heifer versus an open heifer in the fall. And there's some cash flow constraints with that because it's nice to sell a run of heifers in the fall before the year end versus tying up the capital and trying to sell that late bred in March. So there's a couple different things that we do. Every year has been different. So we don't have one style of breeding our heifers. Sometimes it's 45 days, sometimes it's 60, sometimes it's 21. And we look at that on a case-by-case basis.
Good. What kind of bull to cow ratio do you run?
When we're growing, when we were like exposing those 2,000, it was like 70-1. And that's just because of, we didn't want to go out and buy a bunch of bulls.
I just want to make sure we understand because this is a number that when I talk with people about this type of number, they blanch. So that's one bull per 70 cows.
Yes, and because we want the heifers that seek out the bull in the herd.
Yeah.
That is the style that we want. And we don't currently run 70-1, but we do when we're growing big. With our cows right now, we're about 35-40-1 currently. But we will go as low as 70 because we don't want every one of those animals bred. And if you're shooting for a 50-60% conception rate, it would be silly to put in 1 to 25 because it'd be overkill.
Yeah. And I assume on your type of pastures also, if you get down to that 25, do you start to see bull injuries? You are on highly productive areas, so things are fairly close.
Yeah, and we're subdivided into approximately 320 acre paddocks, moved approximately weekly, so they are kind of contained. And and our bulls, we do a really good job. TJ Ellicott is kind of our bull procurement guy, and we're about half home raised, and we're very, very, very cheap on how we run our bull herd. And so when they are with the cows, that's the only time that they're actually going to see good, lush grass, and they do well. They really do not fall apart.
Yeah, great. Some of those bulls, I'm sure, regret that that's only 21 days of each year. Boy, I wish this was a 45-day year. I could use more pasture like this. So I'm just curious, if you hold the breeding season constant and change that bulling rate, from 1 to 25 to 1 to 70, what do you think the impact on breed up actually is? So let's say you just held a middle of the road, a 30-day breeding season, a 42-day breeding season, somewhere, in there. What do you think the impact of that bull number is?
So we've talked a lot about this with intelligent people, TJ Ellicott included. Braden Poppy is my other manager as well. And our bulls are aggressive and they don't fall apart during the breeding season. I think an average bull where someone is chasing carcass metrics that falls apart, there would be some ramifications. I think with our bull battery, I don't think it is much of a consideration. I think our bulls are aggressive. Their plain nutrition, like I had mentioned before, is actually increasing. Like our bulls, we do not cake them. We do not get them hay. We are as hard on our bulls as anyone that I know versus I heard a story on a podcast where someone had purchased a couple bulls and they put the bulls in with the cows and they went to the bull supplier and said, "Hey, these bulls just fell apart on me. What happened?" And the bull supplier said, "Oh, what were you feeding them?" And he said, "Nothing. They were out on grass." And the guy who was selling the bulls said, "Oh no, you can't do that. You need to feed these bulls a silage ration for them to stay apart." And he said, "Well, excuse me?" It's like, I won't be able to keep any heifers, from those bulls.
Right. I don't have any silage. Sorry.
Yes.
They're welcome to eat as much sagebrush as they want, but Okay, so that's one to me that's interesting because I feel like all other things being equal, and it does depend on the bull, but with the right kind of bull up to 1 to 50, there just is literally no noticeable, no detectable difference. When you get past 50, it becomes dependent on conditions and that sort of thing. But especially when we're looking at a short breeding season like you're talking about, like when you look at the genetic data of, who is out there doing the fertilizing, it's amazing how powerful just a small number of individuals can be.
Yes.
Okay. All right. Very good. Any other sort of advantages and pitfalls to this sort of situation we want to talk about? We're close to our time limit here, and I really want to do the third segment with Wally. So we're going to wait for him to get his tech back online. But we've talked about the impact of, acquiring the capital and some of the costs of doing that. We've talked about drought and how important that is. We've talked about sort of some of the specifics of how to make that strategy work. So, for example, being able to develop heifers at a low cost, being able to winter at a low cost are big advantages there. Are there any other things that play into this strategy?
You've hit the big three. I think you did a really good job on that. So no.
Okay. All right. So when we come back next episode, what I'd really like to do is I would like you and Wally to talk a little about the thought process for your very long-term type, I'll call it very long-term, 10 years type strategy, and then Wally's very short-term strategy learned from Bud in the live-in today and what the impacts of those are. So we'll come back to that when we get together next week. But Logan, thank you very much for your time. I really appreciate having you join us. And I hope you and your family are enjoying a wonderful spring and look forward to talking to you again next week.
Thanks, John. Appreciate the conversation.
Thank you for tuning into the Ranchonomics podcast. We hope this episode helped you win today. If you enjoyed this episode, please subscribe and share it with a friend.